Let's bring on board then none other than Arundhati Bhattacharya, Chairman at SBI. Ms. Bhattacharya, good morning. Thanks much for taking time out and joining us today on the show. We understand that your QIP has been launched. Give us some more details. What's the closing? When is the closing rather? How much are you looking to raise?
We've just launched it. So at this point of time, I'm not able to give you too many details. But we will take a call, depending on what is the response as to how the pricing should go and what should be the size. But yes, we have launched it.
It's a big QIP, 9,000 crore plus. I understand that you're restricted to give us a futuristic guidance, but let's talk about what RBI did yesterday, which is Reserve Bank of India has increased rates. How will this change life for State Bank of India? Will your cost go up and will your margins now come under pressure?
At this point of time, I don't think it will have too much of an impact, mainly because there is not much of credit growth. Now, should credit growth pick up a bit and should we need to be borrowing more, in that context, then yes, the cost of funds will go up, and should that happen, we will definitely take a call as to whether we need to have a hike or not. But currently, given the muted credit growth and also the adequate liquidity that we have, we don't really see it impacting very badly at this point.
Right. Ms. Bhattacharya, could you also give us a sense of how much deposit growth you've seen lately? Because you had mentioned earlier that deposit growth has not been a challenge for SBI as a whole. So, I mean, does this mean that you wouldn't need to raise deposit rates?
That's quite right. Actually, we have a lot of liquidity. As you know, we raised quite a bit of FCNB funds that we could swap in the special window that RBI allowed us. So liquidity is very good at this point. And as I said, because credit growth is muted, I'm still to deploy the entire funds in respect of, advances. Therefore, I think at this point, we are not looking at raising any kind of deposit rates. It is not warranted. But again, it's a wait and watch mode. We'll see as we go forward what is our requirement and whether we need to raise rates or not.
So you have cut the home loan rates recently, and given that fund costs are on the rise, are you expecting your margins also to come under pressure?
The home loan scheme at this point of time, I think, will keep the rate where it is. We are not looking at raising it. Whether we will cut it further, I don't think that might happen. But definitely at this point of time, we will hold it. We'll see how it goes.
And how much of an impact will high interest rates have on the asset quality in this quarter?
See, asset quality is impacted not only because of the interest rates. It's the general economic environment, the fact that, we are growing currently at 4.8 instead of where we were, which was at 8.5, and the assumptions that said that it would be even further up. So therefore, asset quality pressures will remain till you see the GDP actually turning around. And this is, as I said, interest is only one of the costs that a company has to bear. But interest also is something that the company can service if its top line grows smartly enough. And that is not happening. So demand has to come back into the market, the GDP growths have to come back. Now, it is a kind of a chicken and egg problem that we are looking at, saying that, if the interest rates are cut, then the growth demand will come back. But that may not always be the case. Growth demand can come from so many other sources as well. So let us wait and see how things happen. Further, as the governor has clarified, there will be a monetary policy every second month, meaning there will be 6 such meetings every year. So to that extent, it's a 60-day window, not too long a period. And therefore, we should wait to see how things pan out over a period of time.
And finally, as far as credit growth is concerned, corporate demand was anyway sluggish. Now, do you fear that it could get much worse?
I definitely hope not, because we definitely are looking to see growth come back. Maybe yes, not in the first quarter of the next financial year. But definitely by the second quarter, I think, growth should come back in. Currently, we are seeing some growth in areas like food processing, which is a seasonal industry. We are also seeing some growth for those companies that are mainly into exports. There is quite a good demand in the export area. So with further, we are also still looking at the stalled projects, that those projects will come on stream and will generate credit growth. So I think, let us look at all of these elements and see how it all feeds in. But definitely by the second quarter of next year, we hope that we will see some kind of a turnaround.